With the global economy gradually recovering from COVID-19's outbreak last year, China's exporters have been receiving increasing orders. Li Jin has seen his suitcase orders almost doubling from 2 years ago. But the continuous appreciation of the renminbi during the past year has been eating up his profits.
I never expected the fluctuation could be this severe. Just because of the exchange rate fluctuation, my profits are gone.
This suitcase had its price confirmed to a European client on July 8th, with the quote valid until December 8th. But during those 5 months, the value of the renminbi has risen 15 basis points. That means that for each suitcase Li sold, he lost 2 yuan on the currency exchange, half of the profit on the sale. The exchange rate broke 6.35 yuan per US dollar on December 8th, its highest since May 2018. Soon after that, the central bank announced a rise in the reserve requirement ratio for foreign currency deposits by 2 percentage points. The move may slow the currency's rise in the short term, but generally the renminbi is still retaining its reputation as a currency of rising value, and that's to say it will be hard to slow its possible outperformance in 2022.
The gain for this year is quite domestic. What we see is the most is driven by the foreign inflows into the China stocks and the bonds market. The global market sentiment these few weeks is also pretty resilient. Different central banks give the different directions in the European countries. So that probably is also the trend for next year. If the policy divergence among the different countries start to emerge and also intensify, that probably will increase the FX volatilities.
And so Zhu says it's important for trading firms, especially small and micro-sized exporters, to plan ahead and take action in advance to avoid the potential risks. This Shanghai-based accounting firm has 600 clients and says 10% of them are small and micro-sized trading firms. It's been offering specific solutions for them to avoid losses brought about by fluctuating exchange rates, including cross-border yuan settlement.
For those who are using forward foreign currency letter of credit, we would suggest them to use discount or full freight instead. It will entail a small amount of bank service fee, but you can get the foreign currency to convert it to RMB instantaneously. And for those who are registered in the free trade zones, we're happy to compare the differences between the onshore and offshore RMB against the foreign currencies. Lastly, we would suggest for the firms who engage both in importation and exportations to use one single foreign currencies whenever possible to hedge the forex risk.
Chen does say, however, that many of their clients are now quite experienced in dealing with the situation of rapidly changing exchange rates. It sounds like they better be.